Markets did sell off a bit more yesterday. Again, we just kind of keep going through this correctional phase in the markets right now. Here's what you need to know before the bell this morning. Nothing here to be concerned about to any great degree. Something we've been talking about for the last last month or so, saying, hey, markets are very overbought. We're due to a 3 to 5% correction. It was kind of ad nauseum. Well, we've had 3% in the correction so far, so we're working in that process, still above the 50-day moving average, which still right now seems to be like the most likely support level for the markets. Markets are starting to get a little bit of oversold here. Markets are going to try to bounce again this morning. We've tried a couple of bounces, during this kind of correctional phase that have failed. So again, we're going to try to bounce again this morning. We'll see if we can hold that through the day. A lot of this will hinge on the CPI report this morning. But again, we're kind of oversold enough really short term for a bounce here in the market. So again, kind of expect that today. The other side of this, though, as we've been talking about for a while, is bonds. And again, over the next 18 to 24 months, this is still likely going to be your very best opportunity for investment. And in fact, just a couple of days ago, I doubled in my personal investment account, doubled my own bond position for this reason, is that this is a kind of a longer term monthly chart of interest rates going back to 1994. And again, we're moving up, and we have been really kind of fighting here with a double top in interest rates, and we're very close to triggering a monthly sell signal on interest rates, which is at the highest level since 1994. And you have to go all the way back to the 70s to find a level higher than this. But again, markets, the bond market interest rates themselves are extremely overbought here, about to trigger a sell signal. That is like, and again, this is a monthly index, so this moves slowly, right? This takes a month of data to change. So again, doesn't mean that interest rates are going to go plummeting tomorrow, but we are certainly in the position here, and this kind of goes back to that Federal Reserve conversation. If they start talking about staying here, keeping the rates higher for longer, economic weakness is going to start setting in because of higher rates. That's going to start to pull yields down here. So again, when you start to look at stocks versus bonds in terms of valuation, bonds are extremely undervalued when stocks are extremely overvalued. That tends to work out in the favor of bond owners longer term. So again, kind of, just when you start thinking about markets and where to put capital, this is kind of one of those math functions that work in the markets and again, tend to play out. But again, on a short-term basis, stocks are certainly ruling the roost right now because stocks are very much sentiment driven. And again, the chase right now for speculation in the markets, for gambling in the markets, that's certainly here and present. Again, so as we have this correction in the stock market, there's going to be here another push in stock prices moving into the end of the year. Certainly don't discount that just simply because of sentiment and kind of this risk-on attitude. That's what you need to know before the bell this morning.